Welcome to SBA Today for the week of July 15th, where our motto is likely helpful, definitely entertaining. Tanya, what are we talking about today?
Well, I love how you say week of July 15th versus today's the 16th. But anyway, regardless. Okay, so today we've got the SBA Connect went on last week. So we've got a lot of bullet points for you guys. Get your pen and paper ready because we're going to give you the Reader's Digest version.
That's right.
And did you know that your clients may be using your bank, or actually they're going to be previously everything was in the big banks and whatever. Who knows who they're using now? So we're going to find out a little bit later. Anyway,
we are.
First, though, Paul, give us what's been going
on.
Yes.
So we took a trip up to Alaska, Juneau, and so we were up there for the last 5 days and just got back today. There was this the whole joke during the entire trip is my brother-in-law was always saying, there are bears everywhere. They're like flies. They are everywhere. Okay, I was up there for 4 or 5 days. And
so Paul,
yes.
Was he saying, did you know there's bears everywhere? Did you know?
Wow. Is that considered a mom joke? Is that a mom joke?
Not a dad joke, that last I checked. Anyway.
So throughout, no matter what we did, I go, maybe we'll find bears. Maybe we'll find bears. And, nothing happens. Okay. Nothing happens. We're like, and all of us get into a car and we're going to drive up in the hills where there's always bears. 3-hour drive. How many bears did I see?
Zero.
Not a bear print, not a bear nothing. It's the only thing I wanted to see was a freaking live bear. That's it, okay? And so, and we just kept on joking. Oh, well, looking outside. Is there any bears? Nope, no bears. Go to the airport. There's like a stuffed bear. That's as close as I got, okay? But here's the takeaway on this. They kept on joking. Well, I'm sure if you leave some trash out, you'll attract bears. Well, isn't that kind of like sales? Like, it really got me thinking, I want to see a damn bear, okay? But what did I do to attract it? Nothing. I did not lay out any trash. I swear to God, last night I was about ready to, because I was like, and I should have. But that's about sales, right? If you just stand here and say, I want sales, you will get nothing. But what did you do to attract them? What did you do to lay out trash to attract the bear to come and do an SBA loan with you, right? So the biggest thing I just want you guys to think about is to make sure that you are throwing something out there to get people to end up talking to you, or don't be like me and just say, I want to see a bear, and never see a bear.
Well,
other than that, it was a great trip.
And it could be laying out, goodies versus trash or whatever to bring them in. And you know what? If you want to see a bear, why don't you come here to Colorado, play Arrowhead Golf Course? Because last year I was in a tournament, and I'm not kidding you, we got on the very first tee. Well, it's the 13th tee, but it was a shotgun start.
Yeah.
And here comes a baby cub, like a baby cub. So you know what happens with cubs, right? Mamas are not nice if you're around their cub. So we all freaked out. We tried to hurry and get off that tee and get out of there. But anyway,
I could satisfy my dream, but no bear.
Well, thanks for sharing that, Paul. That was a good one, actually.
Yeah.
I like that. It's true. Put something out there. If you want to get something back, you got to put something out as well. So,
amen.
Nice.
Well, let's get into our SBA Connect call, Reader's Digest version. So, new 1919 is out, and it's official. And as of last week, you have 30 days to update your files to this new edition that if you look at it, you wouldn't know the difference. So make sure you check out the date at the very bottom to recognize the words that are out there. They did also add some a new certification, because remember that 1919 covers our you-know-what for the certifications. This one is giving SBA permission to release info about other SBA loans. Well, G-Manese, if you've ever done a 4363, you had to fill out that little form, right? Well, now you don't have to because now it's on the 1919. So good job, SBA. That was a good one.
I know. We like that one.
Yep. So make sure you have 30 days. So check your website, check your wherever you may have a 1919 and get her updated. They spent some good time about the 1086. So again, 1086 are for those who sell on the secondary market. If you don't sell in the secondary market, feel free to go grab another cup of coffee. But they are making it significantly easier. And for that, I cry with happiness because I have nothing but troubles when I am doing the 1086 every single time I sell the loans. So there's now 3 tables of data, no duplication, very simple. So I look forward to seeing that. So again, SBA, thank you. You're listening. Number 3, on a written lease. This one I need to get better at personally. Are you double checking if it's only exercisable by the borrower, the renewal? I don't think that's normal language. Yeah, so you may have options, but is the options by the borrower or is it by the borrower and the landlord? Make sure you're reading that because that can be that can get you, especially with some of the updated language in the SOP. So
you mean none of the other stuff in leases can get you? I mean,
yeah, nothing.
It's just adding another layer, right? Peel that onion, people. Peel that onion.
This one was interesting because they want the average loan amount is going down on SBA loans, which is what the administration really wants, which is good. So 2024 went down to 421,000 compared to 477. So that's a good thing. So we're continuing to serve the underserved and doing the small dollar amounts. But let's be real, we need those big dollar amounts too. That's how we all get paid. So keep it going, but let's make sure we're helping
we
on
need to
that.
help everybody from the small ones to the larger ones.
Right. Most of us. Go ahead.
Well, they're not keeping the number. That's not talking about the even smaller ones in the micro loan area. So that's just, you know what I mean? So
that's just 7A.
We also have the smaller ones elsewhere.
That's true.
So yeah.
That's true. Yep. This one I was kind of shocked because it's July and I'm like, what are you talking about? The FY 2025 fee notice is coming soon in the next few weeks for next year. Can you believe that we are almost into the next fiscal year? I had a hard time wrapping my head around that. But
this year has gone fast. I mean,
it
just really has gone fast somehow. I don't know where it went. So yeah.
It'll be very interesting to see what those fees are. Are they going to keep the $1 million no fee? Because boy, that's popular. Are they going to increase it up to past $1 million? My vote's no.
Highly unlikely. I highly do not believe that they will do that. But maybe they'll keep the million and or take it to about 750 or something.
I was just going to say the 750 is probably what I think they're going to drop it down to. But again, we have increased defaults as a program. So
yeah, but we've increased defaults depends on sizes and the types of businesses and stuff like that. So there probably needs to be a little more look at who were the defaults and what were they bringing in to go with that. It's not always just the loan size.
Yep. Like I tell my customers, SBA is an insurance policy. It's a policy you pay for but get no benefit from.
Oh, come on, you mean it's not that we just give them money because SBA is backing it. So obviously we don't need any of the other stuff that we typically put in for our loan deals.
You make it 100% guarantee, and we will do whatever you want.
Oh goodness! All right, moving on.
They talked about the working capital pilot program. The August 1st is the rollout. I just saw in the Federal Register. Yes, I am a nerd, and look at the Federal Register.
I'm just going to stick with yes, I'm a nerd.
That came out, and I look forward to reading that, which hopefully will give us some additional information and probably more to talk about next week as well. But that program will be coming out, and there will be a lot of trainings that will come out from SBA on that. So keep that in mind and make sure you have your calendar open for that program, because I definitely look forward to seeing what that provides. So more tools in our tool belt, right, Tanya?
Always.
And then they talked about the two new reports and issues, the FinCEN reporting beneficial ownership. This affects all borrowers. All borrowers have to register through the system. I ain't dwelling on that. That's got to do that over a beer.
Yep.
And then the 1071, based on how many loans you make, you may have to qualify for this, and data given. So, I mean, it's a lot, but if you are a SBA manager or a manager of a department, definitely look at the 1071 and make sure that you are on the right track on that, because that's also coming up 2025. 2025 is going to be a fun year, isn't it, Tanya?
Yeah.
I'm scared on more ways than one.
Positive.
For us E-Tran nerds, vehicles, they have made it easier for you to upload information on vehicles. And we all know vehicles suck.
I cannot stand it sometimes when there's vehicles, especially when there's like a list this long. I'm like, no. It's worse than affiliation. I swear. I cannot
give that to your processor you like the least. I'm kidding. I love all my processors the same.
All of it. It's like, oh, no.
But they have it now where you can actually upload a list of vehicles, and you only have to list one and then upload the rest. So thank God. Thank you very much, SBA. Some of you guys may have already gotten this, but NADCO came out with an affiliation decision tree that they were willing to share with the 7A. And it really makes it very easy to determine affiliation. So most of us now have kind of figured it out, I think. But if you don't do a lot of SBA loans, you may still be, a little confused on that. And that is A-okay. That's why we're here, and that's why we have a podcast, is to share that with you. If you would like a copy of that decision tree, and you did not get it from the 7A Connect call, you can send us an email, SBA Today at artofsba.com, and we will be more than happy to send it to you, or I will send it to you personally. Yeah. All
right.
They talk about franchises. Go for it.
Franchises. Yes. Okay. First one, there's one franchise that allegedly states that, or it allegedly states that it can take money out of the accounts. There is one franchise that allegedly states that it can take money.
I have a hard time typing. English is my second language.
All right. Curves caters to women, but it has a men's and women's restroom / unisex restroom as well. So that makes it eligible. That is so interesting to me, Paul.
Right.
I'm like, it's the total thing of spinning and how you get around. I swear.
Anyway. Well, I want to go back really quick, though, that they're talking about a franchise, and they won't say what it is, but maybe somebody on the call does. But that a part of their franchise agreement, we're talking about control, right? We remove control. But as a lender, we need to think about common sense, right? If the franchisee says, I can take money out of your accounts, that's control to a whole new level. And if you approve that,
right,
it's not the mission. So again, I don't know what franchise that is, but they talked about it, and it's something that's being discussed.
Got it. I was like, what is he talking about?
Sorry.
All right. Also on franchises, what to look for. The business must have control over its revenue and staffing, which is kind of what Paul was just, I guess, mentioning. Business must not have discriminatory hiring practices. Nobody should have discriminatory hiring practices. I mean, that's true. Why do we have to say things that seem such common sense, right? But we do.
That's right.
Discriminatory client practices. The women only gyms with no admittance for men, and or a men's only whatever it is that doesn't admit women, or or any of those, right? It can't be specific towards one and not allow the others. Deed restrictions that negatively impact the business's ability to sell or the lender's ability to get a valid lien. Well, yeah, I mean,
duh.
Like, all of these just seem like common sense, but somehow we got to put them out there, right? The standard 7A loans, within the SOP 5010 7.1, lender's credit memo must discuss any credit information provided by franchisor, such as number of failed franchises and cash flow projections. That's sometimes challenging whenever you're buying into a franchise and you've got a franchisor that's got multiple and they're all rolling up to one. I've ran into that so many times, and I was like, you got to be able to split this out, because we've got to know what ours is taking over. You can't just sit there and say the whole franchise is doing this, and yet this poor little new franchisee potentially is coming in and buying, two of the worst properties there are, and yet you're giving them, a percentage of what the total is. So yes, that makes sense to me. Anyway, keep going. Let's talk about some office suites.
Office suites, salon suites, ghost kitchens was a great conversation. So it's really important that you this slide, I would recommend re-reviewing the meeting on that. But it may be eligible for an office suite, salon suites, or ghost kitchens if the revenue is earned through membership, not rent. That's interesting. The business customers do not have an assigned space. That's interesting. And the applicant is responsible for all upkeep and maintenance in that. So I thought this was a really interesting one, because I do get a lot of those. And so take a look at that.
Well, I'm trying to figure out, like, an office suite. I get it, right? Unless you've got, I've seen office suites that they do have the same office that they go into, but it's a membership. It's every 30 days. It's not it's not a, I guess a yearly lease or anything along those lines. I've also seen, what about hair salons and stuff? They have specific spaces.
But that doesn't make you qualify. So
I'm like, wait a second, this is kind of confusing. In the ghost kitchen, that makes sense. Like, some of that, the last one there, the responsible upkeep maintenance, that's kind of always been there. Because if you think about storage units, that type thing, as long as they're selling like boxes, or, they're the ones that are renting out the spaces, or they're doing something along those lines, then, you can make it work. But anyway, that's pretty interesting.
Yep. Cavers. You do not have to run cavers anymore. That was a friendly reminder. Now, is it nice to have access to that system in case you're talking to a customer and curious? Yes. SAM.gov. You must be doing this on your own. That is not a part of the framework. Friendly reminder. They talked about, well, maybe we'll do it someday. No, it is not. SAM is on your own. They updated. They talked about the criminal justice. The bottom line is, if you're on probation or parole, you are now eligible. If you are incarcerated, that includes work release or home arrest. No, you are not. So home arrest or work release is a no. And last but not least, they are finally talking about an updated servicing and liquidation SOP around the end of August. So a lot of stuff is coming up for this month and next month. So that was our 7A Connect call, and I think we just move our last piece into next week. What do you think, Tanya?
Yeah, I think we already brought it up. I think we can bring it up, and I can go.
Okay.
I think we need to.
Go for it.
Yeah. All right, go ahead and pull that up. Basically, it's small businesses consider their primary financial service provider to be, and it's talking about large bank, small bank, credit union, non-bank financial institution. 47% are the large banks. Imagine that. Also, though, it says services used by the small businesses at their primary provider. Now, this is surprising to me, because the big banks, these are sticky products, people. These are the products that the big banks specifically really want you to maintain. Parts, deposits, okay? 94% do keep it at their large bank, small bank, or credit union versus the non-bank financial institution. Loans or financing, it's about 50-50. Merchant services, this is a surprise, 25% at the banks. 43% are moving outside, going to the non-financial institutions. 15% of payroll is now staying with the banks and credit unions. 51% are outside. 9% and 8% on investment accounts. Like, Paul, have no idea what the heck that means. What are they going to, cryptocurrency, or they're putting it under their mattress. No clue where the rest of that money's going, but that's what it says. Anyway, I thought that was pretty interesting. And I think the ones that are really going to be challenged the most are going to be the large banks more than anybody personally, because I know when I worked at the large bank, biggest sticky products are the deposits and the merchant and things that are really difficult to move from that bank to another. So yeah, I think it gives some of us smaller guys a little bit of an opportunity. Anyway.
That's right.
All righty. So if you want the news as soon as it breaks, people, it's LinkedIn and YouTube on Tuesdays when we break for the fastest news. Otherwise, any of the platforms you use for your streaming will be on those as well. And if you've got anything to talk to us about, if you want to comment, if you want us to go over something, please reach out to us via SBA Today at artofsba.com and or message Paul or I. And if you are a passionate SBA professional, then we've got our other family of podcasts, and that's the BDO Show and the Art of SBA Lending. So, hey, that's it for today, and we look forward to seeing you next week.
Have a great one.